G'day Internet, and Max right here, and that time of the month again. We're going to have a great chat here with Juan Verde, one of our senior, guests here at the Success Council channel. Juan, thanks so much for being here. How are you doing?
Max, my friend, how's it going, sir?
The middle of a Bitcoin bull market. We're all smiles, all teeth over here. We're super happy. Bitcoin's hit an all-time high. Your last prediction was correct. I believe you made a promise, which was next time we chatted, that Bitcoin would break through that its resistance. It would break through to all-time highs, and it did so. Well done. Let's talk about a couple things. So, okay, we stalled out at 120. Is that it? Is it over? Is there more to go? What are you seeing in the tea leaves?
All right, so a couple of things, and just before I start this conversation, two disclaimers. One, I'm fully invested right now, so my biggest position by far, at least as I think we're entering the final phase of this 4-year cycle, I am mostly invested in Bitcoin. I think it's 80% Bitcoin, 20% random selection of altcoins. ETH stands out among them because, well, I timed the entry pretty well. I bought a bunch of ETH when it was 2,400. So it's risen quite a bit. But so it's 80% Bitcoin. I'm long Bitcoin. I expect higher highs going forward. Number two is I may get into the weeds a little bit because when Bitcoin is at all-time highs and we're cleaning record after record every other week, I tend to focus on things that may stop the rally or things that give me a sense of how high it's going to go. So I'm looking for that. Typically, the way my brain works, because I'm a cycle person, is if markets are falling, I'm looking for a low. And when markets are rising, I'm looking for the next stop. I don't really care what's in between now and the next stop. I just want to know when that high is going to take place. So again, and I may get into the weeds a little bit because I am a trader and I look at intraday price action, even though I don't trade intraday. My main trading strategy is I trade once or twice, maybe 3 times a year. I got 2 trading signals this year, for example, so far in 2025, just 2, one in May and another one in July. So it's not much. That being said, I think the next significant high may come in the first few days of August. And you can head to my YouTube channel for that because we're starting to put out some of my predictions there. And I've been saying, the reason I'm saying that is I've been saying for about a month at this point that August, early August, maybe the next significant break in Bitcoin's price. Couple of things there. If Bitcoin is not trading above 125 by the time we get to early August, then maybe August is the point where the trend accelerates to the upside, actually. So that's a possibility. That remains a possibility. That August, instead of producing a high, produces a low. That's called a cycle inversion, quote unquote. And yes, my model falls victim to that cycle inversion at times. Not really seeing that this time around. Beyond that, what I will say is that I'm getting some vibes, some post-Trump election victory vibes here, which is not entirely good. That rally after the November election was the weakest so far in this bull market. It was not a good rally. It lasted about a month. It only took prices about 50% higher, which is not great. Up until then, we were doing 200% or 100%. This thing was 50%. It's quite disappointing. But the thing that disappointed me the most, again, I may be getting into the weeds too much here, but I need to vent all these. Okay, I need to share these. The other thing that bothers me a bit is when you see this rotation into altcoins with Bitcoin just stalling and not doing anything, because those rallies, and I was saying the same thing back in December last year, they're not sustainable. If you see a lot of people gambling on the shitcoin space or the altcoin space, and Bitcoin stands still and doesn't move, yeah, those rallies don't tend to last. That's what I saw back in November, December 2024. And I was warning, hey, this doesn't look sustainable to me unless Bitcoin can lead the way higher. And I don't mean in percentage terms. I always make the distinction between saying, it's okay if Solana's up 100% while Bitcoin is only up 20%. That's normal. These are lower float, lower liquidity, lower market cap altcoins. Of course, they're going to move more. But sometimes you see Bitcoin go down or stall, do nothing. Case in point, we've been stuck at 119, 118 for 2 weeks almost at this point. And the altcoins are going crazy. Not a good sign. Now, of course, that can change. You can see Bitcoin break out and get back into leading the way. Again, not in percentage terms, but in terms of, hey, Bitcoin is rallying and it's dragging up all these other shitcoins. That's okay. That's good. Those are sustainable. Those are great. I, as a trader, enjoy those because you can make some money on the altcoins like Ethereum recently. But I do worry if I see Ethereum have 100%. It's not 100% yet. And Bitcoin in that time period, it doesn't do anything. That does worry me a little. And so I want to see Bitcoin break out higher. I want to see it rally. It needs to get past 120. And the other thing I would say is we stopped at 100K. And I do want to get into the discussion. I want to get your thoughts because you're an OG compared to me in this space. And I'm hearing rumors that I'd like to talk to you about. So we stopped at 100K. Okay, we clear that. We went to 110. We stopped there again at 110. Now we seem to have hit 120. And I don't know where the supply is coming from, but people keep selling. And what I hear is these are the so-called OGs, the so-called diamond hands, the ones that have held Bitcoin since 2011. This famous person, whoever they are, who bought 80K Bitcoin when it was like $4 or something. And now apparently he sold everything. That's what I heard. I heard it. He sold everything. And I keep hearing that all these back holders from way back that own tens of thousands of Bitcoins, they're looking at these prices and they're cashing out, which is leading to these kind of weak rallies. And what I've heard is that there's a rotation going on where the OGs are selling, but they're selling into the likes of Michael Saylor, who are not going to sell their bags anytime soon. And that could be the fuel for the next rally. That makes a ton of sense to me. But the timing here is what concerns me. I'm still a market timer at heart. And I know if we keep heading, if we're stalling by Q4 this year, that's it. Because I think at that point, I don't know what's going to happen, but the cycle will turn down as it always has. And yeah, maybe we're trading at 140K, 150K, and we don't go beyond that. So
Yeah.
I'm curious to hear your thoughts on why are people selling at 120, Max? Why do they think this is a high price? These diamond hands, these OGs, what's going on? Are they buying yachts?
So the OGs always sell into rallies. They always, always, always. That's what I'm watching. It's not like the OGs are like geniuses and wait until the end and time it perfectly. They never do. The moment things start getting up, they start selling and start chipping away, and just start taking chips off the table into rallies. That's what I kind of see every single cycle. This particular big one, the one you're talking about, for those people at home who didn't hear, because it's blockchain, we can see stuff. There was some coins that have sat idle since I think it was 2011
Yeah,
that got pulled out and withdrawn. It was $9.4 billion of coins moved. I'm not sure if the sale got confirmed, but it looked like they had spent $50,000, not per coin, total, no, to buy 80,000 coins in 2011. It was under $1 per coin when they bought it.
incredible.
The theory is it was Roger Ver, and he sold it, and he sold $9.4 billion worth. And I'm not 100% sure if the sale got confirmed, but that was the rumor that happened. Bitcoin went down from, I think, 120 to 117 on that day. And so that was the big headline news of an OG liquidating. Now, we don't know if that was his entire stack. We don't know if he sold a small portion of his stack. We don't know what, and we don't even know for sure it was him. But if it was Roger Ver, for those of you who don't know, Roger Ver, he was the one who led the block wars on the losing side, meaning he did not like the way that it went, and he did not like the way Bitcoin was going, and he actually sold a lot of Bitcoin for many years trying to peg Bitcoin Cash to Bitcoin dollar at 10%. And he got bled and bled and bled and bled and threw away, I would argue, a lot of Bitcoin.
Yeah,
That was an unsuccessful attempt, but he's had a little bit of, he's been frustrated with the direction that Bitcoin is going. And if it was him, it could be him. And he's a very ideological, principled person. I've met him, hung out with him, had dinner with him, interviewed him on this channel. And, at $9.4 billion, money doesn't mean anything. It could be a principled stance that he's like, I don't want nothing more to do. The government's involved. He's a hardcore anarchist. The government's involved. The government's going to start buying it, and I want off this ship. So I don't know what to read into that exactly. But that's kind of how I'm piecing it together and joining the dots on the news. To your other point, I completely agree with you that I hate it and I get frustrated at crypto Twitter with because that's their fault as far as I'm concerned. It's this degenerate gambling mentality. And in order to get clicks, you got to tell everybody about how you made 1,000x yesterday. And so what crypto Twitter does is all they care about is alt season. Like there's no sense of, oh, I can 100x my money in 10 years. No, that's not sexy enough. Or even 1,000 extra money, not sexy enough. I need to talk about 1,000x in a week. The only way that happens is with shitcoins.
Yeah.
And so everyone's trying to get their clicks. Everyone's trying to farm clicks. And they talk every day on Twitter. It's altcoin season starting. Altcoin season is starting. And it's been that way for 2 freaking years. And I think, quite frankly, they destroy these rallies because what they do is all of these eyeballs that come into the crypto space that want to get into Bitcoin and should be starting there. The moment there's 8 seconds of good times for Bitcoin, all of crypto Twitter is altcoin seasons here, and there's this leak in the bucket. You've got this new institutional money coming into Bitcoin that's filling up the bucket, and the leak is these degenerates who have been around here for a year, 2 years, 3 years, 5 years, even 10 years. They're like, oh, I want 1,000x next week. Altcoin season's coming. They start selling their Bitcoin, putting into shit coins, and it drives me nuts because it stalls out the Bitcoin thing, and it's self-defeating because what they end up doing is it stalls out the altcoin thing. And we've seen this. I've seen so many of these experts on crypto Twitter they've been calling for altcoin season. They've been telling they're going to smash it for over a year now. They call altcoin seasons beginning every other week, and they just keep stalling themselves out. And it's basically been going nowhere for a year. So that's my assessment. It drives me nuts. So, but okay, that's what's happening. There's another ingredient I'll add to this recipe, is that as this institutional money comes in, for their entire existence, they look at charts and they see their RSIs hit certain numbers in traditional equities markets and traditional world, and they're like, oh, this is the time to sell it. It never goes over there. It doesn't go and live up in this really high RSI, these technical indicators. For those of you at home, the indicators I'm talking about, these reflect when things are overbought or oversold. And so when they see in traditional equity markets that something is oversold here, they know they need to get out because people are getting too aggressive, and it's going to have a little bit of a correction. Okay, in Bitcoin and crypto world, that doesn't happen. It goes way higher into the RSIs. It lives there for longer, and it's just not what they can comprehend and compute. Of course, they're very smart guys. They can comprehend it and compute it, but it gets them into a position where they have career risk. And so it's like, well, hang on, there's a correction. You call your analyst back in the room. It's like, wait, this thing was up at oversold at 90 and you didn't sell our position. So even if they can look back at the historical charts and they can say, well, in this particular thing, it lives up there and that's okay, that it makes them very, very uncomfortable because they have career risk. So you've got the money pouring into the Bitcoin bucket, which is all the institutional money coming in. They get scared earlier, they sell earlier, they take profits earlier, and these rallies are going to be muted. You have these degenerates, which are the leak in the bucket, which is let's go and gamble at the casino of shitcoin world. There's like 10,000 to choose from. Maybe there'll be 20 of them around in like 10 years. All right. And they want to go and do that. And you got this leak in the bucket. You got the money pouring in, but it comes in steadier spurts, less aggressive spurts, less FOMO, more disciplined trading, taking profits more regularly, et cetera, and then you've got the bet the farm leak at the bottom. And that's how I visualize this entire process. I think it's, why we got stuck at 70, why we got stuck at 100, why we going to get stuck at 120. And for a little bit of a prediction from me, I think the next place we get stuck is around about 136,000. And again, we'll be disappointed. It'll be like, if you're in the last few cycles, it's like, we're off, guys, this is it. And it'll get stuck at 136 and it'll drive me nuts for the exact same reason. But I think these the altcoin boys are going to get slapped about a little bit. What are your thoughts on that analogy?
I agree 100%. I'd be curious to know why you think 136. Not that I disagree. It's an interesting number, but I'm glad you touched on Wallstreet and the disciplined trading. I actually wrote an article about this last week because I was making the same point. I say, guys, these people, and I never worked at Wallstreet, but I was trained by Wallstreet veterans, and I know how they think because they taught me to trade the same way. And you're exactly right. This is how they trade. If it goes up a little, if it breaks out of a range, they're going to take profits within a few weeks if the market is up enough. And they're comparing this to equities. So they make 10% or 15% in a week. They're out. They're out of the market. They start selling. They start hedging. I put up the example in this article saying even if they're just hedging, if you're buying a put option, somebody's selling it to you, and that person is shorting futures because they need to hedge their deltas. So somebody out there is shorting. And I'm seeing that this is, and I actually called it the professionalization of Bitcoin. And I was making the point, it's not really a good thing. Sure, I think it's a good thing in the sense that maybe volatility goes down and we have steadier uptrends. I think you can say that about Bitcoin this time around too, is that sure, it's not up as much as it used to, but it is steadier in its trend. The uptrend is remarkably steady. So that's good, I guess. Personally, I prefer the good old days of 10x in a few months. I don't think those are coming back because it's a much more professional market. I think you have automatic flows into the market now. I'm talking about the Michael Saylors. This is automatic flows. That kind of, I've seen this in other crypto assets. If you have people who buy regardless of price, that tends to push the price higher, and it shows up cycle after cycle because you get steady uptrends. Anybody home wants to see what that looks like, just look at BNB. This is Binance, the Binance chain, Binance coin. Binance recycles part of their trading fees every month or every week. I don't know what the schedule is, but every week or every month they buy back their own token. If you pull up a chart of BNB, you notice that over time it has its up and downs, but over time it tends to have a steady uptrend. Bitcoin is starting to show similar characteristics. Unfortunately, I agree with you. I mean, they look at their RSIs, which, by the way, they're great for range-bound trading markets. You should throw away every oscillator. RSI is an oscillator, meaning that it hovers between like 0 and 1. And that only works in a range-bound market, in a trending market, especially in crypto. It doesn't work unless most of the people involved in that market believe that these things work. Then they begin to work. And I'm starting to notice that in Bitcoin. It's like, hey, these things did not used to work back in the 2016s, 2017s. Now it does work. How come? It's behaving a lot like stocks. This feels like trading a commodity now. And I think that's the future of Bitcoin, honestly. That volatility will continue to come down. I'm starting to think, and this is the first time I'm saying this, but I'm starting to think that if and when we hit the bear market, it's not going to be as severe. I mean, I've been asked this question. I think you asked me this question before, and I said, nope, it's going to be the same. It's going to be the same. I don't think so. I think this time, only Bitcoin. I think it's going to be maybe 50% on the bear market. Maybe 60%. I'd be shocked if it goes down 80% again because it's just much more steady. As a trader, I just like the wild ride of extreme volatility in both directions because it's like trading with leverage, only you don't have leverage. So I used to call crypto a call option with no expiration date. You just make 100x at some point. So why not throw some money at it? I don't think Bitcoin is that kind of asset anymore. And to your point, I think a lot of people are trying to hunt for that still. And they're playing the shitcoin casino because, yeah, those are behaving exactly like the good old days, where, just because it broke out, the trend accelerates, which is something that I had to unlearn from my TradFi brain, had to unlearn these patterns of an asset breaking out and basically losing momentum because it broke out and people start taking profits. I had to relearn a new crypto pattern, which is if it breaks out on heavy volume, it's just getting started. Now it's about to go really crazy to the upside. We're not seeing that in Bitcoin. In fact, a lot of people keep saying, and this frustrates me too, it's like a lot of supposed crypto maxis on Twitter saying it's about to go parabolic, guys, because Wall Street is about to get involved. I'm like, Wall Street doesn't trade that way. Wall Street is not going to chase a parabolic market. They're going to sell into it. If Bitcoin, for whatever reason, begins to go up, 10% every day, at the fifth day, they're going to start liquidating everything. They're going to start opening their short positions. You're never going to see premiums on futures markets like on the CME at 10, 15%. And I don't mean annualized, I mean a 10 or 15% premium on futures markets. We used to see that on FTX in 2021, on Bitcoin, on Ethereum. Ridiculous premiums on futures because everybody's gambling and they want the leverage. You're not going to see that anymore. You're not going to see this on Bitcoin anymore because it's a very professional market. The opportunity is still there because long term, it's driven by money printing, reckless government borrowing and spending, and you're gonna see the rallies. And because it still has very low market cap compared to gold or the stock of real estate or even the stock market, that market cap of Bitcoin at 2 trillion and change is so low that yeah, it's going to go to 10, 15, maybe 20 trillion dollars over the next 10 years. And just do the math on what the price of Bitcoin is going to be at that point. It's going to be between $500,000 and $1 million. I think these are very, very reasonable targets. But it's going to be a slow ride from here on out. The opportunity is still there. And Max, we were just talking before we started the recording that I have a bunch of trading strategies that I'm developing and launching, and they tend to outperform the underlying assets a lot. Like if I launch this on Ethereum, is going to outperform by 20 times, but not on Bitcoin. And the reason my trading strategies don't significantly outperform Bitcoin is because it actually has a pretty steady uptrend. So you just it's good enough to just buy and hold. You can buy Bitcoin, you can wait, and you're gonna make money over time, significant amounts, and much more than on the altcoin space. Because you can buy and hold Bitcoin, because year after year, this professionalization of Bitcoin almost guarantees you're going to see a steady uptrend as it goes to $500,000 between now and 2030, let's say. Whereas the altcoins are going nowhere. The second biggest altcoin, Ethereum, is going nowhere. It hasn't done anything in 4 years. And so those are just a casino now. They're just devolving into a place to gamble. But there's no steady uptrend. There's no returns. There's no consistent returns over time. And then you have Bitcoin, which is it's very different from the rest of the rest of the crypto market. And I'm telling you, I'm not going to get into the weeds, but I do a lot of data analysis on how markets behave. And I'm telling you, Bitcoin behaves very differently, which again, as a trader, not the best place to trade, but it's the best place to invest. And I do have the bulk of my money there because even though I am a trader, I'm not that crazy. And I like to have something in a steady market that I know it produces consistent returns year after year, in spite of the bear markets, which, like I said, I think those bear markets are not going to be nearly as severe. But the flip side of that is the returns are not going to be as explosive either. It's just going to be volatility is contracted, is what I'm trying to say.
Yeah. No, I completely agree with you. And I think it's really, really important for people to understand the difference in those markets. There's like 10,000 plus coins out there. And you have to understand that 99.99% of them are not going to exist in 10 years. So these altcoins, they're not a place to park your money. Bitcoin is a place to park your money. I think with a reasonable amount of confidence, do your own due diligence, but you can expect that in 10 years, Bitcoin would be at least $1 million. By 2035, Bitcoin's going to be $1 million a coin. That's a reasonable expectation to have. It is not a reasonable expectation to believe that, the top 1,000 Bitcoins, altcoins, are also all going to increase in price in that same 10 years. You would expect the vast majority of them to be absolutely worthless and don't exist anymore.
None
So
of them have.
Bitcoin, what's that?
None of them have. None of them have outperformed Bitcoin cycle after cycle. Not a single one.
No.
It's never happened.
No. And it's a very good reason. Bitcoin is in a classification of its own, and the others are all competing with each other. And maybe that's a really good time, and we'll paint the picture as we continue talking here. Some big news in the crypto world with the passing of the Genius Act. I got some thoughts on that. Do you maybe want to talk about that a little bit first and what that means for the market as a whole?
I honestly haven't looked into it, so I'd be curious to hear your thoughts.
Okay. So for everybody at home, the Trump administration said they were going to launch crypto regulation in 3 phases. A little bit of history. What happened in the industry was the Biden administration specifically and deliberately did not provide legislation, meaning they did not provide clarity. And what they did, it was incredibly insidious. They were incredibly hostile towards the crypto world. And what Gary Gensler did at the SEC was they would say, have open roundtables. Hey, come in, guys, tell us all about your industry. Help us try and figure out how to create laws and give you clarity. All these American companies, they wanted clarity. So great. Like lambs to the sheep, they walked in, like lambs to the wolf. They walked in and they said, here's our business, here's how we operate, here's what we do, here's what we'd like to see, here's what we're doing to protect our customers, and maybe we could work towards building some kind of regulations to back this up. The next day, once the regulators had all the information about their business, they got slapped with fines and regulations, and the regulators just crucified them and tormented them and just crushed them under the weight of bureaucratic attacks, basically. And so the crypto industry very quickly said, oh, these guys are hostile. We're not falling for that shit again. And it just made it very, very hard for people to build on the internet, in the world of the internet. Trump came in and said, listen, we're not going to do that anymore. We're going to give you guys clarity, and we'll pass legislation. So it will be long term. It won't be via executive order. It will be done via legislation. And you guys can bank on that and have that trusted with you for quite some time. Excellent plan. Here's the implementation of that plan. They said what they would do is first they would start a stablecoin act, right? And they said that's the easiest thing to do. We can do that relatively quickly, and we'll do that as a stage one. Stage two, they will pass legislation on Bitcoin because that's the next easiest and it's in a category of its own. And stage three was we will do all the other altcoins next because they are also in a category of their own. What they have just done is they have passed the first part of that, which is was called the Genius Act. You can look that up or ask AI about it. What that did, that was the stablecoin regulation. And stablecoins are very, very appealing to any administration that actually wants to help its country grow. What it does is it says people can use, it makes the US dollar far more useful and attractive for everybody in the world to use. So if you have a product, and I would argue that the two main products of the United States are its currency and its military. If you have a product that you want people to use and consume and make money on, then what you do is you make it easier for people to use, give it more features, more advanced, and make it a better currency for everyone in the world to use. So what the Genius Act does is it puts in place a way for people to use stable coins on crypto. And the way they have to do it is any company that wants to do this has to start in the USA. And if you've already started somewhere else or you're housed somewhere else, which a lot of them did because the regime was so hostile, you have 3 years to bring that back into the United States. So all companies that want to have a stable US dollar have to be registered and be operating out of the United States, which means they have to fall under regulation. If they fail to do that, then they become hostiles of the United States government, not a place where you want to be. So of those companies that are going to, you have to be in the United States. And what you have to do in order to protect consumers, you can't have a Ponzi scheme like Luna. You have to have, if you want to do this, you have to have a one-to-one backing US dollars sitting in a bank account or US dollar equivalent sitting in a bank, sitting in trust for every dollar that's out. So if there's billions of dollars floating around in stable coins bouncing around, there has to be a US bank account with billions of dollars sitting in it or billions of dollars of US treasuries sitting in it. That's another very good feature for the United States dollar. The problem we have at the moment, investors are perceiving the US dollar as a little bit too risky. They see that government's spending too much money. They're wondering if the United States are going to be able to pay the money back, and they're not buying US bonds as much as they used to. As a result, the interest rate that the US government has to pay to attract investors to buy their US treasuries has gone up, which means the servicing of the debt for the United States government has gone up. So it was a very, very attractive deal for the United States government. What they said is, we want you guys to create US dollar stable coins based on the blockchain. We want it to be a free market competition. We do not want the central banks to get involved and manage this, but we do need to put in guardrails for consumers. And those guardrails are companies have to be in the United States. We have to be able to get them audited every 3 months, I believe it is. We have to check them out. And the reserves have to be in US treasuries. And so here's what the United States government gets out of this. They get a United States dollar, a much better product that is easier for people to get to, that the whole world can move to. And what you'll find is people in these other countries where the regime is wasting their money, spending their money, the way that they can escape that tyranny of inflation there is anybody anywhere can jump online and buy United States dollars through these things. They don't have to have bank accounts set up anymore or any of that stuff. You house it on your wallet and you can do it. So it's a much, much better product that's much more flexible, that allows international payments in the blink of an eye and all those kinds of cool things that blockchains allow. The entire SWIFT system, all of that stuff will just go by the way of the dodo. That one will go. Okay. The second big thing they get out is as this industry grows and the demand for these dollars grow, then what's going to happen is these companies are going to have to buy US treasuries. And that's how those companies make their dollars, their money. You give them money, they give you tokens that are equivalent. How do they make their money? That money is sitting in US treasuries, earning whatever they can get in US treasuries, 2, 3, 4, 5, 6%, whatever the interest rate is at the day. And that will bring down interest rates for the United States government. So it's a massive win-win for the United States government, and it's a big win for consumers all over the country. It was the biggest no-brainer piece of legislation that you could ever argue for, and even some Democrats voted for it. So that's a good sign. That got passed into law. Trump signed that just last week. And by the way, well, we'll get to that in a second. I'll finish the sentence. I think that's the primary reason for Ethereum's big rally here, because at present, Ethereum is the place where most stablecoins are housed, and Ethereum makes money by selling gas to transport these things. Okay, to send stablecoins. Okay, next act. The next act, they kind of have, I think they've deviated a little bit from their original plan, which was a Bitcoin piece of legislation and then an altcoin legislation. Or maybe they need an intermediate piece of legislation first. But they're basically trying to pass it. Just passed the House. It now gets sent over to the Senate. And they'll probably, hopefully, they said in the next 2 months, they'll have this piece of legislation passed as well. But what this one seems to do is to create the foundations for what the hell is an altcoin, what is Bitcoin, and they're calling it the rules of the game. So if you want to launch a token, what do you do? Let's define an NFT. Let's define a security. Let's create all these categories. And within all these rules, there's all these categories. And that will give people certainty to move forward. I'm not entirely sure if after this is passed, they still need to come back and do a Bitcoin-specific legislation and then an altcoin-specific legislation, or they're trying to bundle it all up in this one thing and define Bitcoin and define altcoins satisfactorily in this one legislation. I haven't quite got that figured out yet. So that's the lay of the land of what's happened in the legislative world. Now let's go to what the hell does it mean to the next 1, 2, 3, 4, 5 years of prices in the worlds of Bitcoin and shitcoins. Juan, what say you?
Well, quite interesting. I agree with you that I think the Genius, I didn't know that the Genius Act was a stablecoin bill. That stablecoin bill, as a non-US citizen, I can tell you that stablecoins are extremely popular outside of the United States to hold dollars. And I can tell you two things. Most people don't even bother with things that are not dollars. They're not going to hold euros or yen or whatever. These coins, these currencies, they have no appeal outside of their own countries. So most people in the global south, they want dollars. And one thing that I think you mentioned in passing, but this is a big deal, is that most of those dollars, if you wanted to own them in the past, you either had to hold them in cash, which actually limits what you can do with this money. If you have it in cash, there's not a lot you can do with it because it's easy to trace. You put it in a bag and you have to sail across the river maybe to a different country or across the ocean, bags full of cash. Nobody wants to see that. So this makes it a lot more portable. But the other thing that governments were very fond of doing is confiscating your dollar reserves. And the way they do it, they don't call it confiscation. What they usually do is to say they convert all of your dollars into the national currency at a predetermined rate, which is usually well below the market rate, which is basically confiscation. What I mean by that is if the dollar is trading in the markets, out on the streets for 20 pesos to the dollar, the government is gonna come in and give you 10 pesos or maybe 5 pesos for every dollar. They're just stealing your money, basically. And they're keeping the dollars because they need that to fund their operations and their regimes. So the stablecoin bill bypasses the banking system, which has become extremely corrupt. And so I am very, very excited about it. And to your point, it's going to create sticky, stable demand for US treasuries because that's stablecoin business. You just mint tokens that are redeemable one-to-one for US dollars. Then you buy treasuries, you keep the interest rate. It's a phenomenal business, which is why a lot of people are actually getting into it. Everybody wants to get into the stablecoin business, which is great because it increases demand for treasuries. So I support that 100%. I think this is very smart of the US administration to do that because during the Biden years, the rumor was somebody else is going to do this. It's going to be tokenized. The dollar is going to get tokenized in Dubai or in London or Singapore, but now it's coming to the US, and this is potentially a trillion-dollar industry over time, I think. So it's good for them. I'm not sure how they're going to define Bitcoin versus the other altcoins. I'm assuming that they're eventually going to call Bitcoin a commodity, and they're gonna maybe say that all these other things, maybe they fall under different categories. I'm not sure how you define Bitcoin. I will say though that Bitcoin has, unlike all the other current crypto assets out there, it's the only one that is actually truly decentralized in terms of having no owner, in terms of having a separation. Also, proof of work is key for this. There's a separation between those who mine and produce and run the network and those who hold. Like Michael Saylor is a big Bitcoin back holder, but he doesn't run the network unless he tried to do that. But he doesn't actually run there. So there's this separation between holders and the ones who support the blockchain itself, and also the fact that it has deterministic monetary policy, hasn't seen a single change in. At this point, it hasn't changed in 8 years. And that was SegWit, which is a soft fork. And since the block wars, Roger Ver, I remember that I actually thought Roger had spent all of his Bitcoin trying to defend the peg. He teamed up, I don't know if you remember this, he teamed up with one of the largest miners out of China. And between the two of them, they actually had most of the hash rate, most of the Bitcoins. They still failed. And this, to my knowledge, was the only attempt at a hostile takeover of the network, and it failed catastrophically. That convinced me that, okay, well, this thing is very decentralized. And so it acts more like a digital commodity than any other asset. That's not true of Ethereum. That's not true of any other asset. Ethereum recently in 22, they went proof of stake. Then they launched this thing. Oh, the Ethereum is now the most deflationary asset in crypto land because we're burning the fees. Well, guess what? Fast forward to, I don't know when this happened because I stopped tracking every network upgrade, but I did notice that fees were getting too expensive on Ethereum, and they just decided to slash those fees to compete with Solana because everybody was moving over to Solana. The fees are too expensive on Ethereum. So now we're going to slash fees on Ethereum. And the problem with that is there's a group of people who decide what Ethereum's monetary policy is, what the features are. And so you can't really call it a commodity in the same sense that Bitcoin is a commodity. And so, yeah, it's on a class of its own, which is what I think this is what makes it such a good long-term investment versus all the other altcoins. And I'll repeat, no altcoin to this date has actually systematically outperformed Bitcoin cycle after cycle. They do so in a single cycle. If you just take a slice of a single cycle, you start from the bear market low to whatever the bull market top was, you're going to find some assets that outperform, but the assets that outperform are always different. And if you look at those assets and you pull up a long-term chart of what they have done over the past 8 years, if they were around 8 years ago, nothing. They're just trading in a very long, very prolonged, volatile range. It's a trader's heaven. I love these. I love to trade these. Once they have enough volume and enough volatility, they're great, especially the ones that are not collapsing year after year. Most of them do. Most altcoins made bear market lows as recently as June of this year. Like they have been falling for 4 years. Okay, that's most altcoins. The ones that don't fall into that category, they're great trading vehicles if you know how to trade. But then you have Bitcoin, which trades, reminds me of gold. When I was trading gold versus other commodities, I understood that gold is a different commodity because it has this monetary component to it. And that leads to very clean, steady uptrends over time. Even though it had this long 4-year bear market, gold has different cycles to Bitcoin. There's like a 7 or 8 year cycle there. You can have 4-year long bear markets in gold, but still trades very differently from any other commodity. Like if you want to trade oil, oil is directions. It doesn't go anywhere. It's like Ethereum. It doesn't do anything. It doesn't go anywhere. Not a great investment. So Bitcoin gives you that volatility, that crypto type of return with, I would say, I don't want to say none of the risk, but a lot less risk. These regulations, I think they're very positive. I think they might push the cycle further because I have seen very heavy distortions in this cycle that I've not seen before. And the only thing I can attribute this to is all of the news happening with the industry. Ethereum, the way it traded, I've never seen that before. I'm not going to get into why, but the pattern is extremely rare. It's like an expanding triangle that lasts for over 12 months. That's very unusual. I've never seen that. I've never seen a major crypto asset do that. Then you have Bitcoin, which has had much longer corrections than usual, but the rallies, not only has it had longer corrections, but it seems to come back again and again. So I'm not sure this pattern of having these multi-month corrections followed by 100% rallies where the price doubles, that could actually extend into 2026. I wouldn't be surprised to see that, because if we keep having these regulations passed and all these good news, that could extend the cycle. So it's interesting what's happening. It seems to be a pivotal year in crypto, probably next year too. The industry's
I think so.
changing.
I think
It's
so. And then
just
there's some very exciting things, also potentially dangerous things, with what's happening with MicroStrategy and all of the different products that they're producing that are Bitcoin backed, and they have
oh, I
they have
have some thoughts on that too.
yeah, yeah. It's that, to me, that is the biggest threat that the crypto
Yeah.
industry faces.
Hmm.
But it could also be its biggest benefit. I'm not entirely sold, but I don't. My beautiful, pristine, in my mind, do your own research, virtually risk-free Bitcoin just got a little riskier with them doing what they're doing with adding in all of those different
I
leveraging things.
mean, it's Bitcoin with leverage, right? My thoughts on that is I used to think Michael Saylor is going to be the next SBF. It's going to be the next FTX. Thing is, I've been listening to Saylor since on and off since 2020, since he broke to the crypto scene.
Yeah,
Um, Uh, I will. He's not stupid enough to fuck this up. Basically, that would be my view.
he's
I don't
very
think he's
clever.
gonna get liquidated. I think the way he's structuring this is pretty solid. That being said, there's two risks to his company, uh, which is basically it comes from the same thing, contagion. He's pretty smart. The way he structured this leveraged, this way to use leverage to basically he's shorting the dollar to buy Bitcoin, which is a good strategy if you're careful, because leverage always exposes you to liquidation. The problem is he's very good at that. I don't think he's going to get liquidated probably ever. Um, that being said, the ones who are copying him, I don't think they're nearly as intelligent, and they're throwing other things at it. They're throwing, Solana, Ethereum, Litecoin, I think I heard recently, and they're much more reckless. Those guys are coming down. So if this thing becomes a thing, if crypto treasury companies become a thing, most of them are going to fail. And as those companies fail, they're probably going to it's going to be a stain on MicroStrategy or strategy now itself. Like people are going to start selling MicroStrategy stock because XYZ treasury company that held Solana just failed. And so they're going to start speculating that maybe Michael Saylor's company is not as pristine as we thought. I think he survives that, but don't be surprised to see a large collapse in the value of his own stock, even though he's doing everything right, because that's how
yeah,
markets work. They begin to look for the next domino, and if these dominoes begin to fall, he's the last one to fall, and he will be affected by this. Again, I think he survives in the same way that after FTX fell, they went after CZ and Binance, and he survived. He had to do time in jail, but he survived. Binance survived. He survived. He's still around. So CC ran a clean shop. He wasn't into the same type of stuff that SBF was into, but it still affected him personally. So Michael Saylor, I hope he realizes he is at risk from people copying his strategy. This is not a good thing because it's starting to take hold. It's starting to become a thing. People want to do the same thing with other tokens. And so this is his biggest risk. And if you're a MicroStrategy shareholder, this is a big risk for you because he may have the cleanest ship of all of them. That does not mean that he's not going to feel the splash from other people, other companies doing stupid shit with altcoins. I
yeah.
mean, we've seen this time and again.
Yeah, it's like I said, it's the biggest potential risk, but it's also the biggest potential reason and a necessary stepping stone to take it to the next level. So I'm a little bit out to lunch on that. I want to talk about something a little different here, which is I think this Genius Act has created a course which will mean that the US dollar becomes even more entrenched as the world reserve currency.
I agree.
I think people will use it even more, and they'll certainly use stablecoin version of US dollars a lot more.
Yeah,
And so that question becomes, what does that mean to the market? I think it's pretty reasonable to say that Ethereum's current rally is a direct result of that because most of the stable coins in the world run off of Ethereum. But here's my concern with Ethereum. It cannot scale to the level it needs to scale to. And what we see in every single cycle, Bitcoin rallies, shifts down to the second tier ones, Ethereum, maybe Solana. They start to rally. Their networks get congested. Gas fees skyrocket, and people go and look for the next tier of thing where they can do their exact same strategy and trade their stable coins on something else where the gas fees are not as high, and you get this cascading down into these other levels. I see that exact same thing taking place here. At some point, the gas fees on Ethereum are going to get too high. It's going to get too frustrating and too expensive to work with, and we're going to shift into other things. I'm just trying to map that out. And is there something that comes from left field that is not really blockchain? It doesn't even need to be blockchain. And is there something that solves the problem now that we have this situation where we can have these stable coins? Does it need to be run on a blockchain? Are we willing to trust XYZ company that's audited every 3 months and they just run an Oracle database and do transfers for pennies? Like, does this whole world collapse? And there's a new thing that comes out. Is there a new thing that should come out? This is where my mind kind of goes to this world, because if that stable coin liquidity goes to somewhere else, that could be the investment of the lifetime. That could be very, very cool. So I'm trying to think that through. I wonder if you've got any thoughts about that, if you've thought about it.
I mean, of course, I do have some thoughts. Number one, my main thought is this: if you move it off of a blockchain, then it's PayPal. I mean, the stablecoin becomes PayPal, and eventually they're going to start doing KYC. They're going to start. It's going to be horrible. It's going to be hell. So I hope we don't go there. I think USDT will probably stay this kind of censorship resistant sort of for a stablecoin, kind of a neutral way of holding dollars that can be transferred across the world in an instant with no KYC. This is key. I mean, a stablecoin, you can hold large dollar balances, multi-hundred billion-dollar balances with no KYC. Nobody has to know who you are. And so I want it to stay that way. If it becomes too regulated to the point where this becomes PayPal or Venmo, then yeah, it's PayPal or Venmo. We already have that. So I hope they stay on the blockchain. Now, what I'm seeing a lot of companies do is they're launching their own layer twos, so that you can launch a layer two on Ethereum. This is what Coinbase did with Base, and I'm seeing other companies do the same thing. If you want fast transactions, and if you want that single focus on stablecoin transactions, that you're not competing with other things. This is the Ethereum's problem is it competes. All of these activities competing with one another. If you have a bubble on NFTs, then suddenly you cannot do a stablecoin transaction because people are, flipping NFTs. So this is the problem, and that capacity is quite constrained. You bring up a good point. Listen, this has happened again and again. At the same time, this has been happening on Ethereum since 2017, and usually there's a cycle to that where the network becomes very congested, fees skyrocket, and then they just come in and lower the fees. So right now at this point on Ethereum, we have pretty high activity compared to where it's been in the past, and fees are very low. It's easy to transact on Ethereum. I see no reason why that cannot continue into the future. That said, I do think that if I was a JP Morgan, or I don't know who's going to be the stablecoin issuer of the future. It could be the large banks, it could be new companies like Circle. Having your own layer two makes a lot of sense. Just as a warning, though, part of the feature of a stablecoin is being able to hold dollars in an electronic format with no KYC and no hassles. It's easy to hold a stablecoin. It's easy to send money to someone, and it's the same as holding cash. Whereas a cash transaction is almost instantaneous, and there's no KYC. If I have $100 bill and I buy something for you for $100, there's no KYC there. You just give me your dollar bill. That's it. We don't need KYC because the trust layer is on the blockchain itself. You know that this is not fake. If you have an Ethereum account and I have an Ethereum account and I make this transfer, and as soon as you see it on your own wallet, you can go to a block explorer and see that the transaction has settled, and you have trust that the payment has been made. No KYC. So this is what makes stablecoins so compelling. If regulators think that the reason stablecoins have been so successful is because they're on a blockchain, they're missing the mark. The reason they're so successful is it's as easy as holding cash once you learn how to use a wallet, but it's electronic, and I can send it halfway across the world to China if I want to in a second, which is not something I can do with cash. But at the same time, this is not a bank. Where if I receive more than, here in Europe, I receive more than $5,000 and I have some bank rep calling me saying, hey, who sent you this money? And I was once told in a Uruguayan bank, my father sent me some money so that I could buy Bitcoin for him. And apparently that's against the rules. You can't send me money to buy Bitcoin. How? Why? He's my dad. This is where we're at with banking. They're so constrained. It's so heavily regulated that I personally have migrated to crypto. I find ways to off ramp. I have bank accounts, but I only use them as fiat off ramps. I have everything in crypto because I trust it more. If this wave of regulation means that we're going to start doing private blockchains with KYC, then I'm sorry, that's just going to collapse completely, and we're going to see a proliferation of unregulated, call it black market stablecoins. The DAIs of the world, the ones that are backed by crypto and they're algorithmic, and you risk having all this regulation be for nothing if you start putting up too many rules. Just leave it as is. Maybe USDC is the perfect poster child for what a stable is. It's not as shady as Tether. They actually have audits. There's no KYC involved. And if some law enforcement agency suspects you're up to no good, they can come in and block your specific accounts. And they can trace all of your funds so that if you migrate those coins to another account, they can block those too. It works perfectly. If you're involved in crime or criminal activity, stablecoin issuers can block you specifically, but they're not requiring mountains of paperwork for everybody else just to be involved in this system. The system is too restrictive as is. Crypto is like a breath of fresh air. It's just free, it's open, it's an app, it's so easy to hold and trade. And by trading, I mean exchanging money with one another. It's the money of the 21st century. It's fully electronic, but it's in self-custody, and it can be transferred halfway across the world in a split second with no KYC. This is what banks could not do. It's a network of trust that is legacy. So trust is created from mountains and ever-increasing mountains of paperwork, not what we want. So I think if the US dollar is to remain dominant, and I think the Trump administration, the people in charge of his crypto policy understand that, just don't get too involved. Just make those companies come home to the United States, have them issue their stablecoins from the US bank accounts, which, by the way, the reason I always preferred USDC to USDT is because I knew that they had audited bank accounts in the US. That's the only reason. I knew that if something bad happened, because these guys are in the US and no bank is going to fail in the United States. And so they have one-to-one backing in the US. That is the perfect, most pristine form of owning dollars. It's direct custody, and from there, it's like having dollars in a US bank account with none of the hassle. So It's perfect. Just leave it as is. Don't do anything else. Like I said, if you go down the path of KYC and paperwork and private networks, and that's where it goes. If you have a private network, eventually you're going to start having a whitelist of people you allow, people you do not allow. The reason blockchain works, the reason Bitcoin works, is because there's no KYC, right? Nobody even knows. It's pseudonymous accounts. And listen, if you're up to no good and some law enforcement, if you're involved in criminal activity, they can track you in a block. You're not safe using stable coins or crypto. You're not safe at all. Your money is very easy to trace. So this is for everybody else. This is not for criminals.
I like it.
Those are my thoughts.
I like it. All right, well, we're going to wrap it up there, guys. Go ahead in the link in the description here. There's going to be a link to Juan's channel. Make sure you go and subscribe to his channel. He posts a lot of good stuff there. Make sure you subscribe to this channel if you haven't already. Ask any questions below. And a cool announcement here this week, sometime in the next few days, I'm going to be doing a video basically responding to your questions. So here's what I would like you to do. If you have any questions that you want me to answer, not silly things like customer support or to do that, but any things on investing, and it could be gold, could be silver, could be crypto, could be Bitcoin, could be real estate, could be taxes, you name it, I will give you my very best amateur opinion. I'll just work through all those questions and answer them for you. One of the places where you can ask those questions is in the bottom of this video in the comment section. So go ahead and ask those questions. Make sure the very first word is question, right? Question, colon, then ask your question. Make sure your question is no longer than about 1 or 2 sentences, because I won't have time to read a whole thing during this live stream. It's not going to be live, it'll be recorded, but I just want to move quickly through the questions. So make sure question is the first one, because I'll scan through a whole bunch of comments and only read the ones with the word question at the front. So make sure the word question is there at the front, no more than 2 or 3 sentences to ask your question, and I'll be happy to answer those questions in a large Q&A. So yeah, guys, go ahead and do that. Like and subscribe. Juan, thank you very much, and we'll see everybody really soon. Take care.